40, now 46 funds. They've been through booms and busts. They've been through halvings and forks and airdrops. And what I'm very proud of in terms of that part of this rollout is we have on most days the tightest spreads. And I think that surprised people and is one of the reasons, you know, we're right behind BlackRock and Fidelity.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses the crypto and Bitcoin. According to Cathie Wood, it seems that there was a significant amount of unanticipated demand that we failed to recognize or address. Regarding the wallet issue, they were seeking exposure, and of course the SEC granted them approval. It seems that many individuals are interested in this. Various factors converge simultaneously, leading us to this point. This has been an exceptional achievement by many ETF benchmarks. Undoubtedly, everything is running smoothly with the demand so far. We are fortunate to have an incredible partner at 21. Shares are crucial for supporting our infrastructure and operations. It's worth noting that these ETFs differ from traditional ones, and you're working with underlying assets that fluctuate and undergo airdrops, making it a unique situation. Conventional equity or bond ETF 21 shares have been around in this world for 5 years. With 40, now 46 funds, they have experienced the highs and lows, the gains and losses, and the various changes in the market. And what Cathie Wood is very proud of is that we consistently achieve the tightest spreads on most days during this rollout. It's interesting how our performance has caught people off guard, contributing to our close proximity to BlackRock and Fidelity, and lots of things Cathie Wood discussed, so please watch the video to end, and share this video and subscribe our channel, Everyday Finance. Thanks.
It's not just alpha, it is, I think our clients understand, given the due diligence that they have done, that we are slightly differentiated from an infrastructure point of view, a custody point of view, a wallet and number of addresses point of view. And I think they've been surprised to know that this is really important. So I think that's one of the reasons we are garnering assets. Well, now with the price appreciation, maybe with the price appreciation, that would be $200 million worth.
Okay.
So less than 10%.
Gotcha. Yep. Okay. Yep. So it's not
Good
a ton.
Question. Yeah.
It's not insignificant either, though?
No, it helped us in the early days because we were able to develop liquidity very early on as we made that transition from, you know, what is now a very high fee product in the context of where the fees are to a lower fee product for our clients.
Okay.
Coinbase is number 1. Block, I think, is number 4. And of course, that has a very important Bitcoin story attached to it as well, which many people, they know it as Square and Cash App. They don't know about how involved the Block is with Bitcoin.
Sure.
As it enters emerging markets. No, and the reason for that is that all we're capitalizing on right now is the layer of the internet that developers did not build in the 90s because they didn't know commerce and financial services would take place on it. And so this is just the beginning. Think about how big the internet is, how global it is, and how ubiquitous it is. The financial layer has only started.
Market cap growth, the price action of BTC.
Yeah, as you know, we can't tell who our shareholders are. Maybe at the end of the quarter we will see the largest shareholders. But you know, the pent-up demand has been in a lot of places. Retail, it has been there because, as I mentioned, you know, people don't want to deal with wallets and hardware and all of the friction that you have to go through to self-custody. And then on the institutional side, the SEC gave Bitcoin the green light, and so institutions understand this is a new asset class. They have been studying it, and I'll tell you why they've been studying it. In 2018, Cambridge Associate, which is a consultant to endowments and foundations, it came out with a study and basically said, you may not like this, but you better study it because this could be a new asset class, and we truly believe it. It is a new asset class, which means that any institution who is looking for low correlations of returns among their assets needs to look at Bitcoin and other crypto assets if they want to increase their return per unit of risk.
According to Cathie Wood, this particular layer of the internet was not initially developed in the 1990s by developers who were unaware of its future role in facilitating commerce and financial services. As a result, it represents a significant omission in the internet's early construction. When considering the vastness and global reach of the internet, it becomes apparent that the financial layer is just beginning to emerge. The pent-up demand has been observed in various retail sectors. It is worth noting that Cathie Wood also acknowledged this phenomenon. People prefer to avoid the hassle of managing wallets, hardware, and the various complications that come with self-custody. This is especially true for institutional investors. It seems that the SEC has given Bitcoin the green light, which has caught the attention of institutions that now recognize it as a new asset class. They have been analyzing it, and Cathie will explain the reasons behind their study in 2018. Cambridge associate, experienced in providing guidance to endowments and foundations. It released a study that, to be honest, may not be to your liking. It is important to thoroughly study this, as it could potentially be a new asset class. We have strong conviction that it is indeed a new asset class. It is important for any institution seeking low correlations of return among their assets to consider if individuals wish to enhance their return per unit of risk. They should consider investing in Bitcoin and other crypto assets. Let's back to the Cathie Wood interview.
Yeah, I think that as both institutions and individual investors and advisors and asset allocators are doing their homework, the light bulb is going on. And basically they're saying, again, they're beginning to understand that, wait a minute, this is nothing but the internet financial system rolling out. This is a big idea. And it's Bitcoin, of course, but then there are smart contracts, DeFi, decentralized finance. We're starting to use this term internet financial system. It doesn't sound as defiant. Okay. It's just technology, at work, and actually making up for lost time. The early developers were in the 80s and the early 90s. Again, they didn't conceive of commerce or financial services. Now we need to catch up. It's interesting that you say that. I think many people are beginning to understand the scarcity value associated with Bitcoin and other crypto assets. And there's something really interesting happening in the world today that is macro, that people aren't connecting directly, but I think they will. In fact, they're not even talking about this. In Nigeria, in June of last year, the government let the Naira, local currency, float. It's a new administration, let it float. It's an oil-rich country. We can support it. Guess what? It's lost 2/3 of its value. And the government is now detaining 2 people from Binance and is insisting, that they need to learn who has been manipulating the Naira with Bitcoin, which we don't believe that's what's going on. What we believe is there is a flight to safety. And we saw this with the regional bank crisis last year. And we had NYCB recently, again, a reverberation of the regional bank crisis. That is also macro. The deposits system-wide are still going down. The problem has not gone away. Bitcoin is an insurance party against counterparty risk. Banks have counterparty risk. Bitcoin does not. And it is an insurance policy to preserve purchasing power and wealth, right? So I think that's happening in Nigeria. I think there's an insurance policy here against, wait a minute, I don't understand. The banking system is still showing deposit outflows. Maybe I should have a little insurance policy because I don't understand that.
According to Larry Leopard, the price of gold has been manipulated, which presents a unique and complex situation. Let's not delve into that conversation, but there are 2 things happening that we need to address. As we discussed earlier, it is evident that the government is devaluing the currency. This fact can be proven by examining M2, consistently growing year after year with a steady increase in money supply and the same number of goods prices are on the rise, and that's all right. We are aware of the truth, we acknowledge the existence of this trend, and we understand that this trend is deteriorating, which will have an impact. With the surge in prices, there will be a notable impact on commodities such as gold, which cannot be easily replicated. Bitcoin gold has been fully distributed and has a long history of around 5,000 years. Anyone interested in gold is well aware of its value and significance. It's quite fascinating to observe the significant impact that Bitcoin has had over the past 15 years. The entire world is still unaware of this, but it's quite fascinating because you possess something that has the potential to become popular. It's evident that the government is increasing the money supply, leading to monetary debasement. Additionally, there is an adoption curve to consider. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.